Hello students, welcome you all back to my channel Khan's Commerce Tutorial. I'm Hashim Ali Khan. So already we have started first unit of this cost accounting subject, that is unit and output costing. The last video, in the first video I have explained you the method of costing, that is the unit and output costing. In which type of industries this method of costing will be applied. I have explained you in detail, and how to prepare the cost sheet, what are the items to be considered. All these things we have discussed in the first unit. Hope every viewer has already watched my first video. Without the theory, you cannot start the problems. So already we have done 6 problems in the first video. Now I am continuing the 7th problem. Hope all the viewers have got the hard copy of all the problems from the link under my description. If you have not made the printout of the problems, you cannot be able to follow the solutions. So keep ready the problems which are given in the link. Now I am explaining the 7th problem, reading out the 7th problem. See the 7th problem. From the following particulars, prepare a cost sheet showing cost of material used. So we have to make a cost sheet. So in the cost sheet we have to show the cost of material used, material consumed, prime cost, works cost, cost of production, percentage of works overhead to productive wages, and percentage of general overheads to works cost. This is a requirement. We have to make a cost sheet. In the cost sheet, we have to show how much is the prime cost, how much is the works cost, how much is the cost of production, what is the percentage of works overhead to productive wages, and what is the percentage of general overhead to works cost. This is the requirement. So what is the information given? Stock of material on 1st January 1969. So year ended on 31st December 1969. So this is the opening stock. Stock of material on 1st January is the opening stock of material. Then stock of finished goods on 1st January 1969, opening stock of finished goods. Then raw material purchased, productive wages. Productive wages means direct wages. Sales, stock of material unused. Unused का मतलब closing stock. The stock of material on 31st December 1969. This is the closing stock of material. Then works overhead, factory overhead. Then office and general expenses. Office and general expenses means administration overhead. Stock of finished goods on 31st December 1969. This is the closing stock of finished goods. So we are given 2 stocks. Stock of material and stock of finished goods. First of all, we have to calculate material consumed. Now see the solution carefully. Cost sheet for the year ended 31st December 1969, material consumed. In the previous video also I have explained you how to calculate the material consumed. Take the opening stock of material, add purchase of raw material minus closing stock of raw material. So 10,000 is the opening stock, 2,90,000 is the purchase of material given in the problem. Add up 3 lakh. Minus closing stock of material given in the problem 12,500. So subtract 12,500, we'll get 2,87,500. This is the material consumed. The first point we got. In the first question it is asking you what is the cost of material. The cost of material used is 2,87,500. Now productive wages, direct wages are 1,95,000. Add up material consumed and direct wages, you will get the prime cost. The prime cost is 4,82,500. The second question we attempted, prime cost is 4,82,500. Then works overhead. Works overhead means factory overhead. The works overhead is given in the problem 43,000. So add up the works overhead, we'll get works cost. The prime cost plus work overhead, we will get works cost. We can call it as factory cost also. Works cost kahiye ya factory cost kahiye, ek hi meaning hai. 5,25,500. Then office and general expenses. These are administration expenses or administration overhead. The office and general expenses 36,000. Add up 5,25,500 plus 36,000, 5,61,500. This is the cost of production. So we got the works cost 5,25,500 and we got the cost of production 5,61,500. Right? To the cost of production, we add opening stock of finished goods and subtract closing stock of finished goods. This format you have to remember. Already I have discussed this in the theory video. So opening stock of finished goods to 25,500 given in the problem, add up. Then minus closing stock of finished goods 24,000, subtract it, we'll get 5,63,000. This is called cost of goods sold or total cost. Actually one more cost will come, that is selling and distribution overhead. अगर प्रॉब्लम में selling and distribution overhead दे देता तो we would have added. ये cost of goods sold आने के बाद add selling and distribution overhead, then we get the total cost. But in our present problem we are not given selling and distribution overhead. So cost of goods sold itself will become the total cost. Total cost हो गया 5,63,000. And sales are given in the problem 6,06,000. So what is the profit? Profit is difference between sales and total cost. Sales minus total cost is equal to profit. So sales are 6,06,000. Total cost is 5,63,000. So 6,06,000 minus 5,63,000. Profit balancing figure 43,000. This is the complete cost sheet. Now we have calculated cost of material consumed, prime cost, works cost, cost of production. Now two percentages it is asking you to calculate. Percentage of works overhead to productive wages. What is the percentage of works overhead on productive wages? The formula will be works overhead divided by productive wages into 100. Now see the cost sheet. How much is the works overhead? Here works overhead is there. Works overhead is 43,000. This 43,000 is the works overhead. Right? And productive wages. The productive wages are 1,95,000. So 43,000 by 1,95,000 into 100, 22.05 is the percentage of works overhead on productive wages. Then percentage of general overhead to works cost. Percentage of general overhead to works cost. General overhead means administration overhead. So how much is the general overhead? You can see here. Office and general expenses are 36,000. This is the general overhead. And how much is the works cost? 5,25,500. So 36,000 divided by 5,25,500. 36,000 divided by 5,25,500 into 100. 6.85. This is the percentage of general overhead on works cost. That's all. So we have completed the 7th problem. Now see the 8th one. For product A, the prime cost is 20 rupees per unit. For product A, prime cost is directly given 20 rupees per unit. Factory overheads are 20% of prime cost. तो जो भी प्राइम कॉस्ट दिया है उसका 20% कैलकुलेट करेंगे फैक्ट्री ओवरहेड आ गया. Then administration overheads are 25% of works cost. Then profit is 25% on selling price. Calculate the selling price. It's a very small problem. See, calculation of selling price per unit. So prime cost is given in the problem 20 rupees. 20 rupees is the prime cost per unit. To prime cost we add factory overhead or works overhead. The factory overhead is given in the problem 20% of prime cost. How much is the prime cost? 20 rupees. So 20 rupees into 20% you will get 4 rupees. So factory overhead are 4 rupees. Add up 20 plus 4, 24 is called works cost. Prime cost plus factory overhead is equal to works cost. To works cost we add administration overhead. In the problem it is given that administration overhead is 25% of works cost. So 25% of 24 rupees. 24 rupees into 25%, you will get 6 rupees. So add up 6 rupees, we will get 30 rupees. So administration overhead add करने के बाद we will get cost of production. We don't have any selling and distribution overhead. अगर रहता तो selling and distribution overhead add करते थे, but we don't have. So cost of production itself will become the total cost. Cost of production itself will become the total cost. Now add profit. Profit is 25% on selling price. Sometimes profit will be given as a percentage on total cost. Sometimes it will be given as a percentage on selling price. अगर 25% on total cost दिया होता तो we would have calculated 25% of 30 rupees. अगर problem में 25% on total cost अगर देता तो we have to calculate 25% of 30 rupees. But it is not given on cost. It is given on selling price. 25% on सेलिंग प्राइस, डू वी हैव द सेलिंग प्राइस? नो। प्रॉफिट आने के बाद ही तो सेलिंग प्राइस आएगा, जब प्रॉफिट ही नहीं है तो देयर इज नो क्वेश्चन ऑफ सेलिंग प्राइस. वी डोंट हैव प्रॉफिट, वी डोंट हैव सेलिंग प्राइस. प्रॉफिट डिपेंड्स ऑन सेलिंग प्राइस, वी डोंट नो सेलिंग प्राइस. When we don't know selling price, we suppose let the selling price be 100. In the working note, we'll suppose let the selling price be 100. अगर suppose करेंगे 100 रुपये selling price है, तो profit 25%. जो भी selling price रहेगा उसका 25% profit. तो 100 रुपीस का 25% 25 रुपीस. तो according to our assumption, if 100 rupees is the selling price, 25 rupees is the profit, then total cost will be sales minus profit. तो selling price 100, profit 25. तो 100 minus 25, 75. 75 rupees is the total cost. We got an equation according to our assumption. Assumption basis के ऊपर 100 rupees selling price है, तो 25 रुपये profit होगा, 75 rupees total cost होगा. But what is our actual total cost? Here actual total cost is 30 rupees. When total cost is 30 rupees, then how much would be the profit? जब total cost 75 है तो 25 rupees profit. When 30 rupees अगर total cost है तो how much would be the profit? तो 30 divided by 75 into 25. 30 divided by 75 into 25. 25 1s are 25, 25 3s are 75. 30 divided by 3, 10. That's all. We got the profit 10 rupees. Now we take the profit here. 10 rupees. Now total cost plus profit is equal to selling price. 30 plus 10, 40. Now we can confirm, we can verify whether our answer is correct or not. It is given in the problem that profit is 25% on selling price. Now we have the selling price. What is the selling price? 40. Now you calculate 25% of 40 rupees. Do you get 10 rupees or not? Check. You will get 10 rupees. That means our assumption, our calculations are 100% correct. Logically we are correct. तो selling price अगर नहीं दिया तो इस तरह selling price suppose करना, suppose करके profit मालूम कर लेना. Profit आ गया तो take the profit, total cost plus profit, you will get the selling price. Now you verify whether we have done correctly or not. It is saying profit is 25% on selling price. Selling price we got 40. Calculate 25% of 40. You must get 10, and we got 10. That means our calculations are correct. That's how we have completed problem number 8. Come on students, now we'll start the next problem, that is problem number 9. See the problem number 9. The following amounts were spent in a factory during 1999. Direct material 1 lakh, direct wages 60,000, factory overhead 30,000, administration overhead 19,000. The 4 elements of cost are given that was incurred during 1999. Direct material, direct wages, factory overhead, administration overheads. These 4 items are given for 1999. Early in 2000, a job was undertaken which requires 40,000 rupees material and 16,000 rupees wages. Suppose the last year was 1999 and current year is 2000. So early in 2000, this businessman, this manufacturer got an order, job, which requires material for 40,000 and wages 16,000. If profit of 15% on selling price is desired, indicate the price to be quoted. This is a problem of quotation. We have to give the quotation for the year 2000 for a job. We are given the data for the last year 1999. See, there are 4 elements of cost in this problem. Direct material, direct wages, factory overhead, administration overhead. These are the 4 elements of cost which was incurred in last year. Current year 2000 year, we have to give the quotation for the job. But for the job we are given only 2 elements, that is material and wages are given. Nothing is given regarding factory overhead and administration overhead. How much to be charged for this job? That is not given in the problem. So how to make the quotation? We will make the cost sheet for last year. See, cost sheet for 1999. Direct material 1 lakh, direct wages 60,000, prime cost 1,60,000, factory overhead 30,000, works cost 1,90,000, administration overhead 19,000, 2,09,000 is the cost of production. This much only information is given for 1999, right? Now we calculate two percentages. Percentage of factory overhead on direct wages. We'll make a relationship. We'll make a logical relationship. What is the relationship? Percentage of factory overhead on direct wages. It is not given in the problem, but it is one of the rule in cost accounting. What is that rule? Factory overhead should be related to direct wages. So in working note, I have calculated percentage of factory overhead on direct wages is equal to factory overhead divided by direct wages into 100. How much factory overhead? 30,000. How much direct wages? 60,000. 30,000 by 60,000 into 100, 50%. So we come to the conclusion, factory overheads are 50% of wages. जो भी wages रहेगा उसका 50% factory overhead रहेगा. That is the conclusion we have made. Secondly, percentage of administration overhead on works cost. We make a relationship between administration overhead and works cost. This is also one of the rule, principle in cost accounting, right? So administration overhead, how much? 19,000. And works cost is how much? Works cost 1,90,000. So 19,000 by 1,90,000 into 100, 10%. So by using the last year's figures, we have calculated two percentage. Percentage of factory overhead on direct wages, 50%. Percentage of administration overhead on works cost, 10%. Now these percentages we are going to apply in the current year's quotation. Current year's quotation. The quotation for job in 2000, material given in the problem 40,000 and wages given in the problem 16,000. So prime cost is 56,000. Nothing is given in the problem regarding factory overhead and administration overhead. So that's why we have calculated here. So add factory overhead 50% of direct wages, from here we got it. Last year का percentage calculate करके current year में apply करेंगे. So 50% of direct wages. How much are the direct wages here? 16,000. So 16,000 का 50%, 8,000. So 56 plus 8, 64,000 is the works cost. Right? Now add administration overhead is 10% of works cost. Administration overhead is 10% of works cost. The works cost we got 64,000. So 64,000 का 10%, 6,400. Now add up 70,400 is the total cost. Total cost 70,400. Now profit at the rate of 15% on selling price. Profit is 15% of selling price. We don't have the selling price. क्योंकि प्रॉब्लम में कह रहा है कि प्रॉफिट 15% ऑन सेलिंग प्राइस, जबकि हमारे पास सेलिंग प्राइस नहीं है. कब आता सेलिंग प्राइस? व्हेन टोटल कॉस्ट एंड प्रॉफिट आर एडेड. टोटल कॉस्ट में प्रॉफिट ऐड करने के बाद सेलिंग प्राइस आता, लेकिन प्रॉफिट डिपेंड्स ऑन सेलिंग प्राइस. प्रॉफिट डिपेंड्स ऑन सेलिंग प्राइस डिपेंड्स ऑन प्रॉफिट. तो बोथ वी डोंट हैव. तो हियर अगेन वी सपोज लेट द सेलिंग प्राइस बी 100. तो प्रॉफिट इज 15%. तो 15% ऑफ 100 रुपीज इज 15 रुपीज. 100 रुपये सेलिंग प्राइस है तो 15 रुपये प्रॉफिट है. तो सेलिंग प्राइस में से प्रॉफिट को निकाल दो. टोटल कॉस्ट. Total cost is sales minus profit. So 100 minus 15, you are going to get 85. So we got the equation. Sales 100 rupees, profit 15 rupees, total cost 85 rupees. What is our actual total cost? The actual total cost is 70,400. When total cost is 70,400, how much would be the profit? So 70,400 divided by 85 into 15, we are going to get 12,424. So 12,424 is what? Profit. So we got the profit. Now I am taking profit here. 12,424. Right? Now you have to add up. This. So 7 plus 1, 82,824. 82,824. This is the selling price or sales. That's it. This is the end of problem number 9. Now see the problem number 10. This is the last short problem. After completing this 10th problem, we'll come to the main problems. Now 10th problem, you see, a company wants to give a quotation for the supply of 1,000 articles to its wholesale customer during the year 1998. The cost data for 1997 show the following. Again, just like the previous problem. Last year was 1997. the cost data for 1997 given, we have to make the quotation estimated cost sheet for 1998. So 1997 में what was the cost? Material cost per unit 50 rupees, direct wages per unit 30 rupees, direct expenses per unit 10 rupees. During the year 1998, ये तीन चीजें दिया, direct material, direct wages, direct expenses. Which year? Last year. Now during the current year 1998, material cost will increase by 10 rupees per unit. Last year material cost 50 rupees था. 1997 में material cost per unit 50 rupees. Now during the current year 10 rupees increase हो गया material cost. तो 50 plus 10, 60 rupees will be the material cost per unit during the current year. Similarly, wages per unit by rupees 5. Wages भी 5 रुपये बढ़ गए. Last year wages was 30 rupees per unit. Now current year it will become 35, 5 rupees increase. But direct expenses will remain constant. So last year direct expenses was 10 rupees per unit. And this 10 rupees remains constant given in the problem. Absorb factory overhead at 50% of direct wages. Previous problem, percentage of direct factory overhead we have calculated here. But fortunately in this problem, percentages, there is no need to calculate last year's percentages because it is given during the current year how much percentage is the factory overhead. 50% of direct wages and office expenses are 7 rupee 50 paisa per unit. If the company wants to earn a profit of 20% on total cost, profit should be 20% on total cost. What price should it quote per unit? एक यूनिट के ऊपर quotation कितना देंगे? What is the cost per unit, right? Now, see here. Estimated cost sheet for the year 1998, current year 1998. Direct material, direct wages, direct expenses. ये तीनों को ऐड कर लिए तो prime cost. अब direct material. In working note, I have shown you material cost per unit in 1997, 50 rupees. And in the problem it is given during the current year, the material cost has increased by 10 rupees. So 50 plus 10, 60 rupees is the material cost per unit. Similarly, direct wages last year was 30 rupees and it is given during the current year there is increase in direct wages by 5 rupees, 35 rupees. And direct expenses last year 10 rupees, this year also 10 rupees, no change given in the problem. So 105 is the prime cost. Now factory overhead. Problem it is given that factory overhead is 50% of direct wages specified in the problem. So 50% of 35. 35 ka 50% you get 17.5. Add up. 105 plus 17.5, 122.5 is the works cost. To works cost we add office expenses. It is given in the problem office expenses are 7 rupee 50 paisa per unit. 7.5 per unit. Add up 122.5 plus 7.5, 130 is the total cost. To total cost we have to add the profit. It is given in the problem profit should be charged at 20% on cost. Previous 2-3 problems it was given 25% on sales. अगर sales के ऊपर profit based है तो we have to make the supposition. We have to suppose it. लेकिन यहाँ पर fortunately it is not given 20% on sales. It is given 20% on cost. So cost already we have here. Cost already we have. 130 rupees is the cost. So 20% of 130 rupees comes to 26 rupees. No need to suppose. वर्किंग नोट की जरूरत ही नहीं है. तो 130 plus 26, 156 is the selling price per unit. Quotation for 1000 articles. Actually, the manufacturer got the quotation tender for 1000 units. It has to give the quotation for 1000 articles. So for one article, what is the selling price? 156. For 1000, how much? So 1000 into 156, 1,56,000 is the quotation for making 1000 articles. For one article, 156. For 1000 article, 1,56,000. That's it. So this is the end of problem number 10, and also this is the end of short problems on unit and output costing.